What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 28th of 2019. Well, folks, I hope y'all are having a fantastic day wherever you are, and today we've got a wide range of different topics to discuss for both crypto and traditional markets. But starting off the video, I want to let you all know that I've recently become an ambassador of a project that I really like known as Spend. Now, it's not an ICO by any means. It's actually a payment processor that's working with Visa and MasterCard, where you can actually use a physical debit card and pay with crypto. It's really exciting stuff, so I'm going to go ahead and cut off my speaking here and show you one of the really cool trailers that they put together to explain the product. All right, everyone, I hope you all enjoyed that real quick video on Spend, and I want to end off by saying that I'm really proud and thankful to be working with the Spend team, because more than anything, I really care about real merchant adoption for cryptocurrencies, using it as currency. And along with that, I know how hard it is to get people in the West, especially the United States, Canada, and most of Europe, towards using something outside of a debit card. So if we can break that barrier and build such a solid relation with a lot of the payment gateways that people are used to, I'm proud to stand by it, so long as we can get crypto adopted in the mainstream. So thanks again to Spend for that. All right, guys, now there's a few other things I have to talk about before we do dive into the news. It just seems that we've got a lot of things going on, but I have listened to you all. If you've probably seen that I'm actually in light mode right now. I know it feels like a sin. I'm usually in dark mode on every single application. It's actually because a lot of my cookies have not transferred over to my new browser that I'm using. So we'll first off start off by going into celebration mode by clicking it back into night mode. But if you guys have probably guessed it already, I've actually switched over to the Brave browser, and I finally set over a Brave content creator page. So if you guys want to support the channel, if you guys use the Brave browser and earn tokens for your attention on the platform, you guys are welcome to support me. For those of you who have supported me before, it seems that I've gotten the donations that you guys have given, which I'm really thankful for. But again, it's a nice way you guys can support the channel. Even if you don't support me, guys, go check out the Brave browser. This isn't sponsored by any means. It's just such an awesome browser. I remember I was an early adopter to the Brave browser, like when it first came out. And I'll be honest, it was a little bit early stage. It wasn't ready for me to make the big switch over from Chrome. Whereas Brave has been blocking ad trackers, all these different things, and making the experience really clean. I love the user interface, the customization, things of that sort. So I could go on about it for hours. I might do a separate video on updating on Brave, because I did one a long time ago. But again, if you guys want to support me, feel free to, and I'd really appreciate it. Every bit counts. And along with that, last thing before we dive into crypto markets is that I've got an Instagram page. Finally, it's actually under the name Nicholas Merton. If you guys would like to follow me, you guys are welcome to. And I'll be posting some things from there from time to time, just trying to branch out a little bit and get off of just simply YouTube. I know many people have wanted me to make one for a while, so I thought, heck, why not do it? Alrighty, guys. You guys deserve a medal for listening to me ramble on enough over the past few minutes. Let's go ahead and take a look over cryptocurrency markets over the last 24 hours. And as we take a look across the board, most cryptocurrencies are in the green. And the reason for this really has to do with the resilience that Bitcoin has held over 5,000. Even with the Bitfinex news, which scared markets and created what was pretty much about a 10% flash crash in Bitcoin's value. This was a pretty steady sell-off in a lot of markets. In fact, some exchanges had even further devaluation in Bitcoin's value in a very short period of time. However, we have been able to hold across the board market capitalization for the entire cryptocurrency market, setting in a triple bottom at 168 billion. And it even looks not just in Bitcoin, but like overall cryptocurrency markets are setting in an ascending triangle here, at least a point where I'd be confident that we're going to probably get a breakout over the next few hours if we continue to hold these levels here and start to pick up momentum. Now, taking a look at Bitcoin dominance, we've started to flatten off here a little bit. Again, giving me confidence that this could start to change, where we could start to see altcoin risk taking happening, not on a grand scale, but definitely making up for some of the losses we've had throughout April in this case. So if we get that, it's likely that Bitcoin's going to continue carrying forward and that altcoins might be able to outpace Bitcoin, at least in the short term. Now, the reason I'm confident in this, and we can take a look here at Bitcoin's price more specifically, I'm taking a look at the 4-hour chart here. We are still holding the uptrend line. Even though we had a pretty big breach here with the wicks, we actually came back up to close above here, and we're holding quite steadily. I like seeing that we're setting higher lows on the 4-hour here, and it looks like, again, we're testing back up to the similar range at 5,200. The moment we get a breakout above there around 5,250, I think this thing is going to carry forward, and I don't think it's going to move really in a slow fashion. I think it's going to be similar to what we've seen previously, where we're going to get a nice steady uptrend here where things can move quite quick. And I think we have to think back as we'll take a look at the Bitfinex news, guys. This isn't really bad news for Bitcoin, right? Tether is still operating as it was originally intended. Not to mention, even if Tether were to go bust and people were to move money out of Tether, this would actually be a reason to move money into Bitcoin, right? Because if you're trading between two different assets here, let's say, for example, I'm a large Tether holder. I have millions of dollars in Tether, let's say, hypothetically. I wish I had millions of dollars in Tether. If I had millions of dollars in Tether and I learned that the underlying system was going to go bust, then I'd probably want to move into Bitcoin. In fact, I'd pay a premium to move into Bitcoin. So this is actually what we saw. If you take a look at Tether markets, even with the scare in the news dragging down entire markets, if we take a look here, there's actually a premium on Tether in this case, right? It's around 53.26 right now. It's kind of like the Bitfinex premium we've seen historically over the past year in Bitfinex, right? So I would expect this to continue getting wider if FUD continues to grow, and I really don't think Bitcoin's price should be going much lower in this case. I think it was an overreaction to the news, and a lot of questions of insolvency with Bitfinex. That was probably the major concern that people had, that if Bitfinex has this huge amount that it supposedly doesn't have at the moment to back up Tether reserves in this case, then people would be really concerned about that, right? That maybe possibly they'd had an exchange hack or they had done too much risky things behind the scenes. Alrighty, so let's go ahead and do a real quick summary on the Bitfinex fiasco and really get down to the substantive material. So Bitfinex came out with a recent comment stating that supposedly they are in the works over the next few weeks to get the reserves that are under Crypto Capital back over to Bitfinex and Tether Limited to be able to back up the Tether that they've created. And because of that, it actually seems like this might not be as negative as originally perceived. Now, again, at this point, we are just taking Bitfinex's word. And as I've mentioned in previous videos, because I am entitled to an opinion, I do not trust Bitfinex that much, okay? So I'm going to wait until I get a transparent view that that money has moved back over and that their legal team has claimed that it's moved back over. But this is at least good to hear that they're at least in communications, right? Now, this has not only been the Bitfinex team who's been almost kind of on damage control, telling people, guys, everything's all right, but there's been a variety of major investors, such as Zhao Dong, who's a Bitfinex shareholder, who's actually come out and claimed that, even if it was the worst case scenario that they weren't able to get this money back, that they're still reserved much better than traditional banks and things of that sort. They're talking about how, ironically enough, when you're talking about backing, a pegged coin 1-to-1, and you're not doing something like MakerDAO does with DAI, which is backed with Ethereum as collateral, you can have the potential for fractional reserves, right? And, either way, I'm more than anything, I'm excited to see in this case that Zhao's making the point that, they actually might have had the money. That's a huge shocker. If they actually do have the 1-to-1 pegged ratio, and they claimed here, for example, in Zhao's quote, that there's a variety of banks in Poland and the US and Portugal that hold these reserves, I'm actually quite impressed in this case, and it would actually go against what Bitfinex and a lot of other skeptics had said about Bitfinex and Tether Limited. But again, I want to see a real audit on this. I'll still be fair, guys. That's where my criticism comes. There's been an absolute lack of transparency, in my opinion, personally, with Bitfinex and Tether Limited. And over the years, they've had basically on their website quoting that there is a 1-to-1 pegged ratio to the dollar for every Tether generated. And sometimes you'd also see a quote that said something along the lines that they have assets backing up the value of Tether Limited that aren't always just the dollar, right? So again, there's so much wishy-washy kind of like communication here. And if I could just recommend anything to Bitfinex, it would be that they should come out and explain the current situation, be transparent on their website. I should be, as a holder of Tether, be able to go on their website and see every single key data point that I should need in order to be convinced to use their stablecoin over audited coins like TrueUSD. I know they have Paxos as well, or use crypto collateralized coins like DAI. Why not? Like, I have at least the absolute immutable transparency of the ledger to know about that, right? So that's why I think, honestly, guys, as much as I'm fine with pegged cryptocurrencies, that they need to be audited. And if they aren't, I'm better off using stabilized cryptocurrencies like DAI, right? I think that's going to be the future in that case. But I'd like to know what you guys think down below in the comments. So next up, we've got some exciting news coming out of the financial sector when it comes to cryptocurrencies, and it's coming from a platform known as E-Trade. For those of you in the United States, you've probably heard about E-Trade, or you might have even seen the infamous E-Trade baby commercials, which was actually a set of my favorite commercials back in the day. But E-Trade itself has over 5 million users, and it's been rumored from a variety of top-tier sources that you're going to actually be able to trade as an E-Trade client Bitcoin and Ethereum. So we all know that TD Ameritrade and Robinhood and a lot of other exchange platforms have actually allowed us to get some exposure in our trading accounts to cryptocurrencies. And these companies are feeling the pressure. They not only see the fees that they can make in this industry, but along with that, just the fact that there's a market share for it, especially for retail participants at this moment and institutional clients down the road. So from a variety of sources such as Bloomberg, it's stating that they'll be able to trade Bitcoin and Ethereum. It's really exciting stuff. And also Nathaniel Palmer as well, who's a pretty well-respected tech journalist for the New York Times, has come out claiming this as well. So I'm really excited to see this. Again, I think, as I stated, it's only a matter of time, guys. When one brokerage platform does it, the pressure kicks in and people start pushing the boundaries of what they can do within the regulatory framework to offer their clients opportunities to new markets. So I think this is really positive more than anything. But again, really excited to see this. As someone who has family and friends who use E-Trade, I'm going to be letting them know about this, letting them know about getting exposure to crypto if they want. But I'm really curious as well if this is going to be backed or if this is going to be kind of like paper trading. I'm assuming they're going to actually have to have, much like how Robinhood does it through a third party, they're going to actually have to have the crypto backed up in some way, shape, or form. And it would be really cool if one of these exchange platforms offered the ability for you to actually withdraw your crypto that you bought on the exchange. But I honestly don't see that happening with the restrictions that are around right now on a lot of these traditional brokerage platforms, on these traditional security exchanges. But again, we'll see if it happens. Again, if Coinbase and all these exchanges can do it, why can't E-Trade? Again, I'm not a regulatory professional. Now, guys, I wanted to talk about this because it was just more of a funny story. And in a sense, as much as I think people are disappointed, and obviously it shows in the token price here for Digitex, I want to spend some time to say that I actually kind of appreciate this mindset. Now, Adam Todd, who's the CEO over at Bitfinex, did a video recently the other day talking about, criticizing his own platform. This has been basically seen as one of the BitMEX killers. People have been asking for me to talk about this, and I usually just don't like talking about platforms until they see something promising. But Digitex has been a supposed challenger to BitMEX, and recently it came out with the CEO doing a video walking through the platform, talking about how he's absolutely disappointed at the current state and that it's basically not usable. In fact, here's his quote here. You can read it here. He basically was like, what do I do with this, right? So he's furious at his development team and everything like that. This is the video here if you guys want to go check it out. But this is one of my favorite quotes. What they've delivered here is not the Digitex futures exchange. This is not the BitMEX killer. The only way that this would be a BitMEX killer is if Arthur looked at this and died laughing. I mean, for a CEO to say that about his own platform, that's not only scary, and I can understand why the token price has gone down. I feel sorry for people who are invested in Digitex. I was actually looking at buying a little bit a while back. Thank God I didn't. But I have to say, I appreciate a CEO that holds his development team to a high standard. And in fact, as he says, a lot of this is really basic stuff, like that they weren't able to get on the exchange. So they've actually delayed the launch on the platform. I do wish them all the best. I appreciate it. And I just wanted to emphasize, guys, I mean, this is a pretty stagnant drop here, and increase in volume as well for Digitex. So really upset to see this for investors, guys. But again, I think we need more of that mindset of like, guys, this is impractical for people to use, right? I see too many people getting too confident in the things that they build in this space. I think that was more during the bull market, but I think we need that criticism right now. And we need that, discussion when we're building out products and suites for the crypto space, for people to actually, especially the CEOs of the projects, to be more critical about what they're building so they can get more users actually using it. So I wish all the best to Digitex in that case. Now, let's go ahead here and talk about the housing market. This is something that we haven't discussed in a little while here on the channel. And as we've started to talk a little bit more about traditional markets, I think it's important that we take a look at what's been changing since we last talked about it. So we were more active in talking about the housing market probably towards the end of 2018 as we were going through October, November. So where are we at right now? Well, as we've gone through a little bit of 2019 here, we can start to see that mortgage rates have actually been dropping quite steadily. We've gone from around 5.2% down to 4.5%, about a 0.75% reduction in mortgage rates. And guys, that might not seem like a lot as we're in a crypto space where things are moving up 0.75% any given minute. But this is actually very significant when we're talking about analyzing the housing market. And it was a very stark reaction as housing sales started to deplete in mid-2018. So as we take a look at the numbers here, we can start to see, as we were mentioning, this decline in housing sales. And then look at that, as we started to decrease the interest rate, in this case on the mortgage rate, housing sales, especially for new home sales, have come right back up to the levels they were at in late 2017 and early 2018. And for pending home sales, or existing home sales in this case, we had a pretty big breakout as well, a pretty big rebound in this case for buyers. But however, as much as this has been good to see, I don't think this is going to last that long. The first thing that's going to fall is existing home sales. As I've mentioned, that's where the struggle is right now, because a lot of them are at much higher property values than the newly built homes. I know it seems kind of counterintuitive, but they're usually much larger homes. That's the reason for it. And the thing I want to mention here is what to really focus on, right? So we'll come back to this in just a second, but as we take a look here at the mortgage rate, the reason why 0.75% is significant is that this is going to allow some short-term relief to housing buyers in this case, and that's what we've been seeing reflected in the numbers. As much as we're in a period where on the global scale, outside of U.S. markets, things are starting to enter into serious recession territory. But the emphasis here that I want to put is that this cannot last forever. And the reason I say that is because banks are squeezing their margins here quite substantially. When they drop mortgage rates like this, points, almost a percentage point, let's be real about it, guys, almost a percentage point, this is cutting into the margins as rates are rising. So this leads to either one of two things happening. Either the Federal Reserve has to drop rates, right? Providing more leeway, in this case, to borrow capital and then lend it out to consumers in the form of mortgage applications or mortgage loans in this case, or they're going to have to raise these rates, right? Their margin is determined. They make more profit the more they charge to a client and the lower rates are, right? There's that gap that can either expand or contrast, right? And they can't have it where base interest rates, get more than the rate that they're charging on mortgages. And I got to tell you all, as much as I think banks are criminal in a lot of ways, this is not a wide margin for mortgage rates. You can see in the past, banks used to charge much higher rates, right? And again, this is just a little bit concerning here, in my opinion. I'm definitely interested to see what banks are going to be doing over the next few months and how the central bank is going to be reacting with raising or decreasing interest rates, right? Now, the major thing I want to talk about that I think people need to focus on here, and we get a lot of range here with this data, and it's just taking a look at the trend here for building permits here. This is a really good way to tell where the market is going before any other indicator. And we can see here that we have this rolling over in building permits. And this is not just in the United States, guys. In fact, it's worse off in a lot of other countries. I just went to Australia Housing properties are starting to finally face some serious resistance. I know a lot of people who work as property developers over in Australia. It's getting really bad, guys. It's getting really bad in Australia and a variety of cities like Vancouver and Toronto and Canada and Europe as well. There's been a huge slowdown, not just economically, but especially in the property market. And in fact, in the US, we're actually holding up quite nicely, but you can start to see that shift in trend, guys. We're not holding up the uptrend we had from 2012 to 2018. We're starting to set lower highs here, and that's not good to see, right? Even as we've started to deduce mortgage rates and also freeze the rising of interest rates, right? So now we're actually depending on the fact that we might have to lower rates again, and that's not a sign of a strong economy. But anyways, again, taking a look at probably one of the best indicators here, this is the home builders index we have for the S&P 500, or excuse me, the NASDAQ, my apologies. And this is one of the major indexes we actually use to take a look at the major home builders. We've had a pretty strong rebound since December 2018, where we were holding the relative lows all the way back since in early 2017. Now, do I think this is going to, continue to press higher in this case? No, I really don't think so. And the reason why is I don't think we've seen a correlating increase in buyers, or at least if we have, that we're not going to hold this for a very long time, right? The increase here probably doesn't justify the increase here for the home builders index. But again, it's a matter of whether or not it's going to hold. Are we actually going to continue to see those numbers? And I'll be quite frank, guys, we're getting towards about a full 10-year cycle here for the housing market. Do you want to place your bets in this case? I mean, again, we can go about having different perspectives on it. But quite frankly, when I'm taking a look at the daily time frame and I'm seeing the RSI testing overbought multiple times, and we're starting to see a rollover here, especially at a range where this was key support originally, I think it's going to start serving as resistance. But again, I'd like to know what you guys think down below in the comments. Get a discussion going. Where do you guys think the housing market's going? Do you like what we recently talked about in our recent recession video, or anything that we talked about in today's video? Leave a comment down below as always. Let's get a discussion going. But until the next one, everyone, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.